High cost of living marked the 2024 New Year celebration, a trend which started in May 2023 when President Bola Tinubu announced the removal of petrol subsidy and unification of foreign exchange rates. While these pronouncements have been applauded by international bodies, the consequences have been described as harsh on the people and the economy. Unfortunately, the trend persists through the first half of the year, with macroeconomic data capturing in some cases a worsening situation. For the Naira, it was tagged one of the worst performing globally in the first half after losing about 40% to close at 1,510 Naira for a dollar. The bright side for Nigeria was the capital market. The stock exchange market recorded a return of over 33%, driven by renewed investors' confidence. For the fixed income market, investors enjoyed yield as high as 27.33% on treasury bills in March and 26.76% on bonds. This, however, means a ballooning debt for the federal government and a concern at the Lagos Chamber of Commerce and Industry's mid-year review and outlook.
The debt has increased. Our labor productivity and factor productivity has flatlined. In other words, we are borrowing more than we are increasing our productivity.
The governor of the Central Bank of Nigeria.
With a surging inflation at 34.19%, the Monetary Policy Committee of the Central Bank of Nigeria continued its hawkish stance, and monetary policy rate was raised to 26.25% at its May meeting. This made it about 750 basis point increase in the first half.
This is not something that is a one-size-fits-all and you'll expect, to continue like this. To the extent that the right policies are used, and obviously with the results we've seen, the right policies are being used, I believe that in the not too distant future, things will begin to moderate and interest rates will come down.
Falling Naira meant bad for businesses. 5 multinationals have had to either divest or exit the country in the period.
A lot of the big IOCs, of course, are exiting Nigeria for their reasons, but they are not leaving Africa. In fact, let me put it that way. A lot of the IOCs are leaving the shallow and the land and going deep offshore in Nigeria, and also invest in other parts of Africa.
Attention then turns to the oil and gas sector, which remains the country's mainstay for revenue. At production hovered about 1.2 million barrels per day for the period, below the 1.5 million target. Crude availability was a topic towards the end of the first half, led by Dangote, as it promises PMS supply from August. Local refiners accuse international oil companies of jeopardizing their effort towards energy security. The NUPRC has intervened by asking the guidelines are published.
This guideline, it makes it clear. It makes it a willing seller, willing buyer scenario, and then also it makes it clear that both parties are free to deal with themselves. So it's not as if it's coming from the government equity; it's coming from the crude producers themselves. So yes, it will make supply of crude a lot easier.
There's never a pause in time or the running of the economy. So the second half of the year is already on, with high expectations from Nigerians following the intervention by the Nigerian Upstream Petroleum Regulatory Commission that international oil companies will publish a domestic crude supply obligation guidelines. And this may ensure crude supply to domestic refiners. There's also the newly agreed minimum wage of 70,000 Naira. On the other side, there's 150-day import-free policy on grains. There's a reform withholding tax policy for small businesses, implementation of AFCFTA, as well as expected activities from the newly created Ministry of Livestock Development. Then, governments may also need to turn attention to the debt stock, which according to the Debt Management Office has a portfolio for the public debt over 121 trillion Naira. A worrying fact, since for the first time in Nigeria, debt to GDP ratio has crossed the 50% level. People are still waiting also for the much promised benefits of the economic reforms, which started with the President Bola Tinubu's administration. I'm Ini John Mekwa, reporting for Channels Television News.